So we've been in business for about 13 years and evolved through several journeys to become a payments business. We didn't always start out being a payments business. And the way that we look at payments in Africa is that payments in Africa is not a novelty. We actually deeply believe that it's critical infrastructure that solves real problems for real people and real businesses in Africa. What we have come to see across different sectors is that the need to basically put these pieces together creates a foundation and building blocks for a lot of other things that follow payments, and we'll take a good example. So we got involved in a project in Nigeria in the agriculture sector. 70% of Africa's population is connected to agriculture in one form or another. And it didn't get as bad as it did in Nigeria, largest economy, most populous country. So before Cellulant, government spent $400 million of subsidy buying fertilizer and seeds, attempting to distribute this to farmers. Over 20 years, 90% of this never got to farmers, got lost, got stolen, got resold to the market, creating a host of problems. So the access to fertilizer and seeds that didn't happen sank close to 20 million farmers into poverty. The lack of access to credit that was created by a systemically destroyed value chain took banks completely out of the agriculture sector. And the resulting case is then food production declined, inflation went up, farmers sank into poverty, completely financially excluded, economically excluded, non-existent. By a chance meeting with a guy then who became the Minister of Agriculture, and in a flight, a Kenya Airways flight from Nairobi to Lagos, we spent a bit of time just looking at this critical problem and sketching this ecosystem and redesigned that ecosystem on the back of a mobile payments platform. And sometime in November of 2011, we shipped a team of 17 people, packed them in one apartment in Abuja, and because between November, the rains were coming in February, so there was no time to do any fancy stuff. So 17 people slept, lived together, 24 hours, slept mattress to mattress, rolling out a payments program across Nigeria. A subsequent platform we put in place pulled 14.5 million farmers into a payments platform, created near 100% efficiency in terms of disbursements of sort of $50 for every farmer. Created a pool for another $50 that the farmers needed to bring to the table in cash contribution. And then because this was an electronic payment system creating this pool and this visibility of these transactions, $600 million of lending went into the value chain that supported this sector. The resultant results after 3 years is farmer income for 7.5 million farmers who participated with counterpart funding grew from $768 to $1,800. Incremental output of food added about $30 billion to GDP. Food import bill in the country shrunk from $6.9 billion to roughly about $2.9 billion at the time. Absolutely transformational. So the way we look at payments across Africa is that these types of problems exist in agriculture at the bottom of the pyramid and related value chains, fast-moving consumer goods, government-to-peer programs, remittances, etc. At the top of the pyramid, a fragmented landscape of payments across multiple banks, mobile money operators across countries, different regulatory boundaries, etc., different currencies, and this sort of thing exists. And there's this huge gap for a single payment platform in Africa that then creates a single point of contact, single API, single settlement, and creating the foundation for transformation of everything that we know of a bill payment customer seated in Nigeria looking to pay their prepaid TV bill, of somebody seated in Cape Town trying to buy an airline ticket and pay for it, a farmer in Liberia trying to buy seeds and fertilizer. And so we believe deeply that without this infrastructure, these transformational business models will not exist. So take a good look at this picture. Putting up this infrastructure is not vanilla stuff. This is Cellulant stuff in this district, 3,000 kilometers from Monrovia, no internet, no power. Sometimes this is what it takes to basically put a single customer, farmer, into a payments ecosystem. And symbolically, it happens across different things. It happens across regulatory boundaries, different cultural nuances, different platforms, different bearers, all across Africa. So when you think about Cellulant, when you remember Cellulant, I want you to think about us as a company that is block by block with people like Babangida across multiple countries, putting this block by block infrastructure, bank by bank, country by country, regulatory boundary by regulatory boundary, technology platform by technology piece into a single platform, Cape to Cairo, Lagos to Nairobi, and everything in between. That is Cellulant. Thank you very much.
Thank you for a very interesting pitch. It's really impressive what you have done so far. I just had a question. In which countries are you planning to replicate the project you did in Nigeria? And if this will require any special donor funding, or you can do it yourself to be sustainable? And also, second part of the question, what other products or innovative solutions are you working on to offer something new or something different? I had a brief discussion with your colleague at your stand, but I think that you do many other things, so maybe if you can tell a few words about that.
Okay, thank you. Good questions. So I think in terms of replicating the agriculture model in Nigeria, so our basically growth track has two dimensions. So one is to take this program and scale it across multiple countries. Earlier this year, with this rollout in Liberia, it's been adopted by the African Development Bank as essentially the model for transforming agriculture. And we're in the early stages of sort of planning out a program that will take this model across 23 countries over the next 5 years, reaching roughly about 150 million farmers. So that's the first foundation. Second foundation is to basically evolve this model outside of government. And what we have done in Nigeria over the last year is open up this infrastructure, this database of farmers, this wallet infrastructure for farmers, to banks and other partners who basically leverage this infrastructure to do remittances and things like that. For instance, recently we had Save the Children out of Washington basically do disbursements to targeted groups within this network because their database is profiled, they can target women, and this kind of thing. So these are the two tracks for expansion. On the second question, which is what other services do we plan? The way that we look at our business is that we've got a phase one, which is basically to lay out these pipes to be able to reach these addressable customers, addressable businesses across Africa. So we have done that over the last couple of years, and increasingly now we are starting to lay different services on top of this infrastructure and find customer segments that are using this infrastructure. For instance, I'll give you an example. Recently, a Pan-African airline joined our network, and they want to basically, through a single API, can sell tickets to anybody in the countries of coverage. So today we have presence in 10 countries. We have coverage in 33 countries through some of the solutions that we roll out for some of the partner banks. That means that somebody can go online, book a ticket, and pay for it in Togo with local currency. If they don't have a mobile phone, they can walk into a bank branch and actually do a transaction which gets fired back and ticket is issued. If they're in Kenya, they can pay with M-Pesa. If they're in Nigeria, they can pay from their bank account or from a Cellulant wallet through a single API, single settlement, single point of contact. So the second phase of our business now is to open up this infrastructure to companies and value chains that actually want to solve problems using this payments infrastructure.
Thank you, Ken.
Hey, Ken. Thanks
Hi.
for the presentation. For these customers that you're serving who have no kind of bank account to date, who haven't been served, what kind of KYC and how do you verify that they are who they are and make sure they're dispersed, like across Nigeria and Liberia and wherever else you're serving?
Yeah. So our KYC philosophy is sort of incremental. So we start, across our solution landscape, we have got top of the pyramid who are largely banked customers, no KYC problem there. As we go through down to middle of the pyramid, most of these customers have mobile money, so mobile operators typically have taken KYC out of the equation. At the bottom of the pyramid with farmers, so we did, for the first phase of the solution, we did KYC Lite, so basically map these farmers. Nigeria at the time when we did this didn't have an identity system. Liberia doesn't have an identity system. So basically what we did is we built several levels first, just register the farmers, locations, where they are, what they grow, what type of output they have, etc. And second level, basically, we began to map these farmers and the associated groups. So most farming communities, basically, they've got this cluster of a community head and this sort of thing. So we basically begin to build these network associations. And then recently, we've started to upgrade those to full biometrics to basically allow direct lending to farmers. So, and then this different KYC, as we basically upgrade the KYC, we open up the sort of service basket for different financial services that these consumers can access.
Do you have a question, Chris?
Hey, Ken. How you doing?
Good.
Thanks for that. I guess my question is, most payment systems generally create value for their shareholders by aggregating demand and making a single point of contact between that and supply, right? So you are the choke point and you essentially can charge a per click fee transaction. And you speak a lot about APIs, but APIs cut both ways in that banks are looking at APIs, MNOs are looking at APIs. How do you protect your business when potentially in the future your largest customers could go direct to direct API and then lose that volume advantage that would be inherent to any payment business? So how do you see that evolving, and is that something you're concerned about, and how do you address it or block it?
Yeah. I think it's a good question. I think in terms of the resilience of the business model, so because we are building this sort of very broad ecosystem, so we see several points of resilience. And the first point is that as we have broadened this ecosystem across bottom, top of the pyramid and across country borders, we are finding that there are certain sets of customers where it's just technically not feasible that they would do that themselves. For instance, this airline. To be able to do that across 33 countries. So then we find that for those types of customers, and then it's a large segment because, there's a huge gap for people take payments, for instance, an internet brand wanting to take payments across Africa. So in those cases, we find that there are certain pockets of our business model that are completely in a space of our own. The airline wouldn't go out and do sort of these connections to multiple banks in multiple countries across regulatory boundaries, just not feasible. And then on the other side, it is not attractive enough for the bank to go to the airline directly and pay attention because typically they will provide only a single country, 1 million, 2 million customers coverage, whereas, through a single pipe, the airline has access to 90 million customers and growing because we are really getting good at expanding this. And the second area of resilience is we believe in a philosophy of deeply integrating, not just running a payments gateway because that doesn't add sufficient value. We believe in basically going that extra mile and integrating these payment systems deeply into problem value chains as we've done in agriculture, and we do this with utilities where we integrate this into bill presentment and that sort of thing. And by adding that value, we think we'll be able to defend our margins in the long term.